Let's turn to technology. All Mag 7 names are in correction or bear market territory, losing a collective roughly $800 billion in market cap after yesterday's sell-off. Joining us this morning, Tony Wang runs the T. Rowe Science and Tech Fund, nearly $10 billion in assets under management. Tony, it's good to have you back. We keep hearing not the Mag 7, but the Lag 7. And one of your broader points is that a lot of these beats are simply not getting bought, right?
Yeah, I think that, we've seen strong earnings get sold actually recently. And so I think to me that means that the market is kind of looking through and suggesting that these numbers aren't sustainable. And I think to your point of Mag 7 becoming Lag 7, it just is a recognition that the earnings beats aren't as strong as they were the last 2 years. And they're spending record amounts of CapEx. And so investors are further scrutinizing the ROI on these capital investments in AI. And just, when you're beating earnings, you're accelerating, like the market kind of gives you a lot more leash to spend. And so I think that every earnings from here at this level of spending is going to, probably introduce a lot more volatility as a result.
Have you heard any hint that this CapEx cycle has the potential to crack?
So far, we're still strong on the demand for AI infrastructure and spending. I think that, there are no real signs of weakness. But I do think that, if we get macro weakness, overall broader cycle, like it's hard for, I think, companies not to revise down CapEx as a result. And so far, we're still long and strong on it. But I think that in some ways that adds a little bit of risk because the market doesn't expect any fundamental weakness because the card hasn't been essentially there. So in some ways, it's you could see it as a bullish sign or a bearish sign.
How are you thinking about this most recent IPO drumbeat as someone who invests in technology? It's somewhat surprising. There was the virtual physical therapy provider Hinge Health, which revealed its S1 yesterday. Fintech firm Klarna is reportedly expected to do so as soon as this week. And then you've got CoreWeave, which is expected to start marketing its deal after revealing its IPO filing a week ago. It seems to run counterintuitive to what we're seeing in the broader market backdrop, especially given some of the recent IPO performance of the 2025 class. How are you thinking about new issues in this environment? Is that something that you're even paying attention to given the volatility out there?
Yeah, absolutely. I think companies that are looking to go public often want to launch in a really strong market. And, I think that just given where the valuation of the public market and like sentiment, I think there's more scrutiny on valuation and as these companies become public. And also on execution. I think that a lot of times we've seen IPOs that went out for pretty lofty valuation. The companies didn't execute. And so I think public markets investors are just a little bit more kind of discerning here. And so, I think you've got to really execute if you're going to go public here.
Tony, the turn in Apple and this sort of delay of whatever they might have in terms of an enhanced Siri, is that crucial to the case for the company here? At times, Apple has acted as just kind of a big defensive place to hide in the market just because of the predictability, but the stock has reacted to this latest news.
Yeah, I think that Apple's often like a safe haven for volatility and historically has been viewed as, I think, the tech staple. When you think about it, it's got a really strong ecosystem and very loyal customers. I think depending on valuation, when it gets to a certain level, there are expectations that the new AI features will come. So I think if you're getting rumors that, Siri is going to be delayed or that, the Apple iPhone upgrade cycle isn't going to be as strong or, even a weakening environment, I think at a certain valuation, it does tend to react. And so, I view Apple still as like the low CapEx way to play the Mag 7. And so if the LMs do get more commoditized and, ubiquitous, then, Apple hasn't been in this like space race for the frontier model. So on a relative basis, it could be okay.
Finally, Tony, everybody's looking ahead to Jensen's address next week. I wonder what you think he could say realistically that would be reassuring to some of these broader trends we're talking about.
Yeah, it's really exciting. GTC is going to be a big event next week. And so, I think that what he can really focus on is how he is improving the product performance and unlocking new TAMs. Essentially, like, we need the cost performance and per watt to essentially improve. And so I think the cadence of the product, how he's building out the ecosystem, the software, increasing the usability of GPUs and accelerated compute, I think that would be really helpful to investors to just understand, like, every time you drive costs down, you do unlock new TAMs. I think that investors will be wrestling with the cyclical backdrop and macros. So I think that, he can focus on what he can control, which is his product roadmap.
Yeah, that's going to be a big tentpole event for certainly tech and the markets at large. Tony, appreciate it on another important day. Tony Wang, thanks.